How are you doing
Hi,
this
John.
morning?
Doing well. How are you today?
Great, thanks.
Awesome. Well, let's see if Joe and Scott come on here real quick.
Okay.
Hello?
Hello?
Hi, guys. Who's that, Joe?
Hello? Yep.
Hi, we're on with John.
Good morning.
Hi, John. How are you?
Great. Actually, it's good afternoon for you guys. Sorry about that.
That's all right.
Is Scott going to be able to join us, or?
Yes, he is.
Okay, great. Perfect.
Okay. I'm trying to click into this join me, and okay, here it goes. How do I have to put in some sort of code here?
I think once you click on the Join Me meeting, it should just ask you to, it might download a piece of software quick that you run, and then it'll just ask you to put your tell you to put your name in, I believe.
Okay, because I did download it.
Okay.
And then it's thanks for installing Join Me. When I click on, so I've got it installed on my computer. I hit this Join Me /Swish. It says your name, and
Okay, yep.
this Open Join Me. I click on that. Trying to do it with my browser here to see. Oh, enter your name. Yep.
Perfect.
Okay, I'm perfect. I'm there now.
Wonderful.
All right.
So we got you, me, and Brad, and then should we wait a couple minutes for Scott?
Yeah, give a couple minutes for Scott here, if we can.
Yeah, no worries.
All right. Already on the call. I'm just wondering if he's fiddling with the software now.
Quite possibly, yeah. I actually did just discover a new entrance into the space, or new to me at least. It's it's a software called Screen Meet, and I'm just in the process of getting ready to switch over to that because it doesn't require any downloads on the user end. So fingers crossed to here in the next week or so we should probably be over to that side. And from what I understand, it's easier to get in from the user side and from those that are joining the software. I've used it for my side now for 3 or 4 years with clients and things like that. So from my side, it's super simple. But if you from the user side, it can be a hoop to jump through, obviously. Where are you located, Joe?
I'm in Massachusetts.
Very good.
In the East Long Meadow area, East Long Meadow, Long Meadow.
Okay.
You ever go over the Student Prince to go for lunch or anything?
Oh, yeah, that's a great place.
That's one of my favorites, yeah.
They just closed the place on the West Springfield side, the Hofbräu House.
Okay.
After 100 and some odd years, that's sad. Oh, right now with the casino coming in, it's definitely changing the landscape of things around Springfield.
Yeah. And one of my best friends is from Summers, which is right across the border.
Yep. I'm right. My town butts up against Summers.
Yep.
Hey
Sounds like we had Scott.
Thank you,
Keeping
Scott.
in.
I thought we rescheduled this, Joe. Yeah?
No. We have one at 2 today, and then we have one tomorrow at 10.
Okay.
One's the NED one. Sorry.
Okay.
So appreciate it, guys, joining us today. Basically, there's 3 major parts to our business. One is Uncofer, which is our insurance partner. The other part is SwitchSafe, which is John Oldham, who's on the line with us. And then the third is Endex, NDEX, which is our statement system and really total back office for our advisors. And what I wanted to do today is just introduce you to John and have him give us an overview of the platform and the value that it adds to the advisors as they're doing business with us. And, and another thing about the insurance side of our partnership with Uncofer is that they can provide contracting at the corporate and advisor level, total advisor support and training, and help to get onto our contracting system for the advisors to do business with their clients and can track all those index annuities as well. So what I'm going to do is set up a call with Emily Kramer next week to kind of bring this whole thing together. But today we're going to just do an introduction on SwitchSafe, and with that, John, I'll give the floor to you.
Sure. Well, thank you for joining me. Obviously, it's the 4 of us on the call here, so if you have a question, feel free to pop in at any time. I just give you a little background on myself. I've been an advisor for 17, 18 years in the field. Started with some of the big firms, Thrivent, MetLife, New York Life, before I became an independent advisor back in 2010. When I was introduced first to the index annuity world, and was absolutely mind blown coming from a history of selling variable annuities to see what can be done on an index chassis. And based on my experiences in the industry and some of the shortcomings of products and some of the regulatory changes that we started to see, I felt that there wasn't a solution out there that really fit for an advisor like myself. So from the ground up, myself and I hired a team to build SwitchSafe, which you see now, who we're now partnered with Top Index Annuities. And we're working with, SwitchSafe is working with several independent broker-dealers. We have some very, very large insurance companies, top 5 insurance companies that we're in due diligence with right now. to provide these services to the broker-dealer levels. It's a tremendous time right now in our marketplace to be in an index annuity platform. And one of the biggest reasons for that is what we saw here in 2016. About $104 billion of variable annuities were sold in 2016. And I take a look at things from an opportunistic view as an advisor in the field of based on different, not that I can time a market to the day or to the month or to the week or anything like that, but in a big picture scenario, when do we want to be buying equities and when do we want to be selling equities? And after a 9-year bull run like this, buying a variable annuity with a lot of fees inlaid, with all the principal at risk on a market chart like this just doesn't seem to make a lot of sense to me. And there's $104 billion in 2016 that was purchased. So is there a better opportunity? And I think the index platform that would lock in that principal, protect those gains that we've seen over these last years, still give participation on the upside based on the different indexes, but protect that downside right now is a much better solution. So I think getting the word out to advisors about index annuities is very valuable, and it can really protect clients as we move forth. Our software, SwitchSafe, has really 5 key features. We are the largest database of product information available in one spot. We have a link to the prospectus of over 40,000 current and previously issued products. Those products go back about 20 years, and those products make up variable annuities, index annuities, mutual funds, ETFs, and alternative investments. Basically, as an independent advisor, when a client walks in my door with whatever product they currently own, I want to be able within 5 seconds to have that on my computer, have that on my phone, have that on my iPad, and be able to analyze what they currently hold and compare and contrast that to something that I may want to sell them or that they've been pitched by somebody else. So we have the ability to do a side-by-side comparison of any of those type of products, again, going back up to 20 years, to analyze the fees, costs, and features. With the DOL push, this was extremely huge. With the DOL being rested, put to rest, hopefully, thankfully, good for the industry. Some of this is not quite, the disclosure part of that is not quite as important at the minute, but we'll see what happens with the SEC next coming forward. The other thing that really bothered me in the industry was starting to see the regulatory pendulum really swing in the favor of clients, and clients in the way of not people that were defrauded or stole from or things like that, but a client coming back 5, 6, 7 years later saying that they didn't understand a product that they purchased and now they want to file a complaint or arbitration or sue you. And quite honestly, most of those things happen in our industry because a different advisor gets in the client's home and is, trying to compete for that money, trying to compete for that business. And, oh, my Lord, why would that person ever have sold you that? It's the worst thing you could ever have bought. And now you find yourself into some sort of situation. So how can we document things to prevent that from happening? And then finally, all of this stuff is great, but if it's locked away at the Holy Grail at the home office, it doesn't do you any good. At the point of sale, the advisors need this data on their phone, on their iPad, on their computer, and they need it 24 hours a day, 7 days a week. So having this all mobile friendly is huge. One thing I think that really has been missed in our industry is how important costs are to clients. And one example of that is Geico. Everybody knows the commercial. We can save you 15% on car insurance. And Geico has made just a ton of money over the last 10 years using this slogan. And I asked, well, what's that really worth to people? And the average cost of car insurance in America is about $907. And if you compare that, that's about $136 of savings. And clients are willing to walk away from their full-service local insurance agent that will hold their hand during a claims process and all these type of things for $136. So obviously people out there in the world are fee conscious, and in our industry often that gets overlooked. Buffett just laughs because he owns Geico. He understands competing on price and winning. But I ask, is this just a Geico issue? I mean, do people shop at Walmart because they like the customer experience? I mean, do our clients that we focus on, the clients that have $1 million or $2 million net worth, do those people go to Costco because they want to spend more money? No, they go to Costco because they think they're getting a better deal and things are cheaper. So it's all a price. People, even with a lot of money, are very price sensitive in this world. And Vanguard, Scottrade, now Ameritrade are perfect examples of this. I mean, they've gathered just huge amounts of assets by being able to come out and say, we're the low-cost provider. You want to do business with us because everyone else is more expensive. And where I kind of chuckle a little bit is if we look at the index annuity chassis, an index annuity chassis by itself has zero cost. There is no annual fees that are being deducted out of that account. So all of these things can be compared side by side, and an index chassis looks really good being compared to a variable or even mutual funds or even a Vanguard fund. So it's a tremendous opportunity. And I ask, looking at the upper net worth 60-year-old, on average it says they've saved about $2 million. So if you look at somebody who has $2 million saved and look at their total cost of management, if you could move them from a 3% or a 2% total cost of management to a 1%, every 1% you save them in fees is $20,000. That's real money to these people. If you can get out there and put that in their face and show them that, the same people that'll leave and go to Geico for $130, you might have a pretty good chance of getting people's attention. And I pivot back to this first slide about variable annuities. I mean, Jackson National, $17 billion. When you see the word Jackson National, that's about 4%. On average, the cost inside a Jackson National product is about 4%. So it's a huge cost that people are paying to own these products. And when I, as an advisor, ask them about it, they seldom truly understand the total expenses that they're paying. So what I've embraced all along is using technology to create trust. Don't believe me, believe your prospectus. Oh, you don't want to look through your 400-page prospectus? Great. Let's use technology and do that for you. And Ron Carson just came out with an article last week, or not now, it's probably been 2 or 3 weeks, in Investment News, and it was called "Technology Must Reinforce Trust or Else." And it just screamed at me that this is exactly what I've been saying all along, and now the largest RIA in the world is speaking the same message. And he says, transparency is important. Our profession struggles with a tainted reputation. A 2016 poll by the American Association of Individual Investors revealed 65% of respondents said they mistrust the financial services industry to some degree. And people they're not comfortable walking into our offices. Demand transparency of your firm, your team, and yourself, or your clients will find someone who can do it. Technology is so often used to hide something, like the true presence of meaningful value. Advisors must understand their clients not only crave doing business with brands that look out for their best interest, aka kind of what the DOL is pushing towards. They adore firms that demonstrate and deliver on those promises by sharing how their products and services evolve to better serve their needs. Put people at the center of what you do, use technology, and trust will follow. And I say, well, is he putting his money where his mouth is? And he indeed has. In the last 18 months, Ron Carson has spent $52 million out of his pocket in just technology advances for his firm, because he believes that in the next 10 to 15 years, if something doesn't drastically change in our industry, people will be going on Amazon and buying annuities. People will be going on Amazon and buying their investments. People will be going and partnering with Google to get everything direct from the source. We need the human interaction, but we need to be able to do it in a way that reinforces trust. And I think SwitchSafe completely does that, because when you're able to do a side-by-side comparison of what you're offering and give them that transparency and go back and show them what they currently have, what do you have to hide? So this is what a sample of a side-by-side looks. I'll give you an actual live demo here in just a minute, a couple minutes here, but we are able to do a side-by-side comparison of mutual funds, variable annuities, non-traded investments, non-traded REITs, and index annuities, all of these things side by side, and it takes a matter of seconds, not minutes, and nothing that needs to be done to call into a sales desk or a home office to get it done. We use this process, the process that I've used. It's a simple 2-question process, and I've called it our AUM process, to sell whatever you're looking to sell. If you're an RIA and you only sell fee-based products, great. If you sell annuities, great. The process works the same, and it's a discovery process by saying to the client, Mr. Jones, I'm sure you've saved some money over your life to get to this point. Tell me what type of products that you've owned or you own. And they'll say, I own some mutual funds or a fee-based account or an annuity or this or that. And then it's a simple 2-question process. Mr. Jones, can you tell me exactly how those products work? And they never can. And then the second question is, can you tell me exactly how much it costs for you to own those products each year? And they never can. And once they realize that they don't know how it works for what they currently own, and they don't know what it costs them, and they probably are just going on blind faith because they like Joe up the street who's always helped them, if we can show them that fee analysis and we can help them understand those true expenses, now you can make a compelling case for your services, whatever they would be. Bank products, securities products, annuity products, it doesn't matter. And we've gotten a really big push in the tailwinds right now in this industry because of this chart. Historically, if you go into financial advisors' offices, you've seen this chart: stocks, bonds, bills, and inflation. And the founder of this chart, Roger Ibbotson, just came out with a white paper talking about fixed index annuities and how they fit into this category and how they actually outperform bonds on the long-term basis and how they especially outperform bonds in the rising interest rate environment that we're experiencing right now. So it's a tremendous opportunity to talk to clients who own bonds, bond mutual funds, and say, hey, is there a better way to solve for this rising interest rate environment? Have you considered and looked at this? And you have one of the greatest minds in market studies helping you in make that argument. So ultimately, who's the competition? I look at, Vanguard, for instance. Vanguard, this total bond market index fund, over the last 3 years, has averaged 1.2% returns. I mean, could we find some sort of product within our bag that would do better than this fund? They're charging 5 basis points, so people go there because they think it's cheap. But there's $197 billion sitting in this fund right now that has averaged 1.2% over the last 3 years. If we look at their long-term bond index, which is even going to get hit harder with rising interest rates, it's averaged about 2% over the last 3 years. They charge 15 basis points for this to be managed. They got $10 billion in this fund. And if you think maybe you can't beat one of those two funds, well, what about a money market fund? Vanguard is charging people 11 basis points to sit in their money market fund, and they have $93 billion sitting in money markets right now. So whatever the product that you're offering and your team is offering, getting your mind around the fact of who's the competition and what's out there, and creating a story and a track for you to run on and gain that trust of that client to pivot to your solutions is the key to it all. And within the index annuity world, we've created a chart like this that's called Protect Your Gains or Push Your Luck. We've been on a terrific market run, the greatest we've ever seen. And now we're starting to see some volatility come back. You've kind of hit the jackpot in your lifetime. Is this something that you want to keep pushing your luck, or is it time to maybe protect your gains? And don't forget about fees, because fees, especially in variable annuities, a lot of those fees are charged on the rider value, not the cash value. So when cash values in your annuity decrease in market corrections, the actual total fee cost increases, and it's compounded. So would you like to take a look at some other options? And again, we go back with our AUM process on that. So this is what we're charging, and when I'm speaking to advisors every day, they whip out their credit card extremely quickly, because at $299 a year, $29 a month, this isn't a big ask, and that's because me being an advisor in the field, it's always bothered me at how much they nickel and dime us and charge us for stuff in the field. Seems like every month I'm reaching into my pocket for something else. So at this price point, advisors can justify it quickly. But working with TIA, they're covering that cost for you as well as one of their offerings within the top index annuity platform. So that makes it even bigger. But as I mentioned earlier, one of our top 5 key parts is we worked with a team of securities attorneys to find a better way to document your sales, because we're seeing these types of fines and arbitrations and rulings that are coming down in the regulatory environment that, frankly, as an advisor writing business, the next ticket you write could be the one that gets you thrown out of the business, and it doesn't have to be the fact that you're defrauding someone or doing something wrong, or it all ends up in the hands of a jury. And if your documentation isn't correct, you can be hung out to dry. So we're seeing some of these of what's going on, and he says this one, Jonathan Sweeney misrepresented and omitted several material information when he recommended that his customers surrender 2 variable annuities and use the proceeds to purchase 2, right? He allegedly told his customer that the new annuities had the same benefits as the original, which was false. Most significantly, the original VAs had guaranteed living benefits with enhanced growth features, and one had a death benefit. Now, if you're doing complete transparency using a SwitchSafe documentation system, this can't even happen, because it's all laid out there side by side. Someone with a first-grade education can compare the 2 side by side and say, wait a minute, this has this doesn't have this. Maybe this isn't in my best interest. What about this one, though? This came down about a year and a half ago. MetLife, as a firm, was fined $25 million over variable annuity sales. And what it boiled down to was that they had a 72% error rate on replacement forms. Yeah, these replacement forms that the advisors are having to do out in the field manually. I know as an advisor who's filled out probably 15,000 of these over my last 18 years, these are a pain in the neck, especially when a client walks in with a product that you've never heard of, you've never sold, you don't know any of the details about. They don't have a prospectus. They don't have the details of their original contract. You can easily fill out the right side, but the left side is very difficult. So that 72% error rate really didn't surprise me. This just came out May 8th. Fifth Third Securities was fined $4 million and $2 million in restitution because they had a 77% error rate, again, on the same forms. And I say, well, the advisors don't have this data in the field. SwitchSafe puts that data on their phone, on their tablet, on their computer every day. They have the answer key right in front of them. There's no reason for them to have these type of error rates any longer. But what about even if you do it right? What if you disclose and get that paperwork done right, and the client just decides in the future they're not happy with what they bought? So this arbitration panel gave an investor $1 million for what they're saying was a misleading sales pitch on a variable annuity. The client received far less than the 7% compounded annual return promised by the firm when she bought the VA, according to her attorney. Now, I know what it takes to sell a variable annuity. First off, you got to give a client a prospectus, probably an illustration, probably a rider brochure that goes along with it. But if the advisor skipped that part, the client still was signing an application that on the application elected to have the rider added because it doesn't come standard. Then the client got a contract in the mail, had a free look opportunity, decided to sign and accept the contract, then had a quarterly statement that showed a difference in the initial cash value and the rider value. This was a 7-year-old contract. The lady had 28 statements over that period of time that showed different values between the cash value and the rider value, but yet 7 years later she can come back and say she was misled. Doesn't she have some responsibility to know or what she's buying or when she signs for it, she's agreeing to a contract? Well, if your documentation is poor, Anybody's going to end up in this situation. And the regulators are just being aggressive about that all. So we've built that into our documentation system. That I'll actually show you here when we flip over to that in just a minute, where clients are actually attesting that they understand these features, which would drastically reduce that type of risk and liability. So to kind of sum this up before we go live, and I'll open up for questions before we go live, we're really looking to help you build more trust and be transparent, make more sales, reduce that regulatory risk, and then provide best-in-class documentation. So, Brad, I'll turn it over to you or Joe Scott for questions as I fire up kind of our live login over here.
Oh, that's great. I appreciate it. So basically when we sit down with the advisor and we go through the product with them, they can get this product as part of their overall package when they do $100,000 in production a year with top indexed annuities. Do you guys have any questions so far?
I'm good.
I don't.
Okay, guys.
Okay. I just had here's our live login, so you see how easy it is to do this. I just had a broker-dealer firm of about 375 advisors reach out to me 2 days ago because I had talked to them earlier on in the DOL process about how we could help them. And they just finished up their annual FINRA or their biannual FINRA audit. And FINRA said to them, we're very concerned about your annuity exchanges and annuity replacement. And they reached out right away to me and said, all right, we got to get this in place because exactly what FINRA is focused on. It's easy money for them to go in and prove that the error rates are there. The advisors don't have the data. So once you get a login username and password, this is how simple it is. They're searchable drop-down boxes. You can type in the name of a company, like you can type in Oppenheimer, and there's the list of all the Oppenheimer funds that are there. You could type in the name of an insurance company. You can type in like a ticker symbol. If you type in ticker, then you're only going to get one response back. You select that it's a current investment. I'm going to do a Jackson product here because Jackson, again, there's a lot of fees, and I can show you how that works. I'm going to show you a non-traded REIT. They got very popular these last couple of years. We'll show you how we dissect them, and then I don't know. I'm going to put an Allianz product in here just for fun. So now you can see up here, what did that take me? A total of 10, 15 seconds to be able to pull up 4 products side by side. Again, do this on your phone, your laptop, your smart board in your office with your clients, the computer screen, whatever, and you bring it up. And now within a few seconds, you have a breakdown of a side-by-side of all of these products and all of the up to about 75 pieces of data for each of these products. So for instance, this mutual fund, it's a no-load mutual fund. Mr. Jones, your mutual fund is a no-load fund, but it costs you 1.19%. So when you told me you thought it was about 1%, you were pretty close. But over here, here's your variable annuity product, and you said you thought that was about 1% too, 7-year contract, 10% free. Well, your M&E fee is 1.1, but they also charge you an admin of 15 basis points. So you're up to 1.25, and once you're there, now you have to take your money and put it into one of these 99 sub-accounts. And those 99 sub-accounts range from 0.56 to 2.19. So depending on which ones you're in, that cost is added on top of the 1.25. Let's go somewhere in the middle and call it 1.25. So now you're at 2.5, Mr. Jones. Well, you bought that with the living benefit rider on there, the GMWB. Well, that's an additional 1.2% cost. And if they want, they can raise it all the way up to 1.74 based upon the contract that you've already signed. And here's the listing of all the other ones. Here's your death benefit option. So if you got the highest anniversary death benefit, that's another 60 basis points. Now you're up to 4.3%, Mr. Jones, and you just watch their jaw just drop like, are you kidding me? Down here is the prospectus link. You just click right on that, and it'll take you directly to the prospectus of the product, so you can go through there. These prospectus links go back about 20 years, so all the different products that people can walk into, and you can look at all of them if you need to get more detail. Over here again is like a non-traded REIT. It discloses that there's no liquidity without board approval, because that's another thing that will be an area of complaint in the future. If these non-traded REITs don't start getting liquid, people are going to come in and say, well, I want my money and I can't get it. Well, you knew that when you bought this, there was no liquidity until the board said you could get it. Here's the hurdle rate, disposition fee, asset management fee, how they do the sponsor portion of the selling commission, all the details of this product. And again, a direct link to the prospectus. Here on our Allianz product, this is the new 1222 being offered by Allianz. You break down all of the details on that as well. So again, side by side. And then what we are in the process of doing now is adding the current fact sheets of the index annuities right here. So you'd be able to pull it up because they don't have prospectuses, but at the point of sale, it might be nice to have that brochure. So we're starting to add those, right in that area. So again, side by side, you go right here, print this off, and you can save it as a PDF or print it off on your printer. From there, everything on the right here is all fully customizable at the firm level. So whatever your compliance team wants this stuff to look like, we can mirror your exact current forms. We can do it our way that our securities attorneys like it. Either way, however you want. We can have separate tabs for mutual fund sales, annuity sales, fee-based sale, anything that you want. We can have as many of these tabs as you want. Also, we have a files tab here where you can add any forms or any calculators, tools, fact finders, brochures, anything that you want your advisors to have access to on a quick link basis. We can add those in here as well. I'm going to show you just like the annuity short form here and how we actually have improved the documentation process. Everything on the left, this is kind of a two-column system. Everything on the left is to be able to quickly disclose what the client's current product is that you would be replacing and how it works and what it costs. But then the key is to document our sale and what we're making on the right. So first off, we're going to ask to make sure that as the advisor, are you acting in the best interest of the client? We want the advisor to attest to that. That protects the firm. From there, we're asking some things. Are this meeting their investment objectives? Are you charging additional management fees? Do you have any conflicts of interest? Have you made misleading statements? Then we go down and ask, please select the product features you explained. So, was there a question there? I thought I heard something popping in. No? All right. Okay. What product features did you explain? The fees, the surrender charge, liquidity schedule, crediting method, riders. I explained that rider values are not cash values, that $1 million arbitration. Well, Mrs. Jones, you signed right here that you understood that the rider value was not a cash value, right? One pager. This is first grade language, so you can understand this here. Then we ask them to sign with their digital signature right here. Again, you can do this on your phone, laptop, computer, or print it off and do it with paper. I fully understand the above selected features that we discussed, and I'm of sound mind and knowledge to make this purchase, which I declare to be in my own best interest at this time. Okay, Mrs. Jones, you feel it's in your best interest and you understand this? Sign right here. If you've elected a rider, I understand that any income rider that's added to this product is not a cash value. It's unable to be taken out in the form of withdrawals, blah, blah, blah. Mrs. Jones, sign right here. Again, heading them off at the pass. So if they ever come in and want to complain to the advisor, or it goes even further where their attorney gets involved, if you can put something like this right in front of them, hopefully you never get anywhere near an arbitration because they're going to realize that at the time of the sale they understood that. Document what questions were asked by the client and make sure they are satisfied with the answers. Document which materials you gave them and make them say that they got them. And then ultimately, the advisor justifies how this product that they sold was selected. And then the final conclusion of this all is, congratulations, Mr. Jones. You've elected to purchase this. We've had a series of meetings to get to this point, and you feel that it's in your best interest, and so do I. We only need about 2 more minutes of your time because our compliance officers have not sat down in any of our meetings with us to know how we got here. They may think that I just came and knocked on your door and pounded you over the head with a hammer and made you buy this product. But seeing as that didn't happen, we're just going to document here how this actually went down. So you came to my seminar, you came into my office, you had all your money in whatever, XYZ stock, you thought that was too much risk, you wanted to diversify, blah, blah, blah. You take the 2 to 3 minutes because the compliance officer will always tell you to take excellent meeting notes, but the problem is the client never attests to those meeting notes. So if you get to an arbitration and you're up on the stand, the client can say, you know what, well, that's his side of the story. I don't agree with that, and I never attested to that. Whereas if you get that documented right here and the client attests to that, you stand on such a much, much better footing. Again, these disclosures, we think they're good. Our legal team thinks it's good, but we can customize them however you want them customized. And then at the bottom, sign where it needs to be signed. Go up here to the top, hit our print button again, save it as a PDF, upload it into your business flow process, your CRM, wherever you want to hold it, or again, print it off on your printer and do what you want from there. So hopefully you understand the power of the side-by-side comparison, the power of the documentation, and the way SwitchSafe is really being used to help advisors in the field not only win more business, but to protect the firm along with their own practices.
That's great, John. Thank you.
Yeah.
How do they file it? I know they can print it and bring it back. Can you do electronic filing?
File this report?
Yeah.
So when they go to this print button, when they click that, the printer's going to come up on my system. I just go change, save as PDF, save it, and then attach it to where save it on my desktop, save it to whatever secured folder I use, or at that point just upload that into your Redtail, your CRM, or attach that anywhere in your business flow process. Attach it to an email and send it into your OSJ to sign off on it, however you want to do it. And we did it that way based on the advising of our securities attorneys, because they said FINRA and so many of these different firms have different client data storage protocols. And no matter how we store that data, you're going to have certain firms that aren't going to like it, and they're going to want it to be done some other way. So we made the decision that we will never store any of your client data. So if we ever get hacked, if anything ever happens to us, none of your client data is there. Once you hit print and save it as your PDF or print it off on your printer, it leaves our system. We have no record, no trace of it at that point in time. So if they ever came into us, the only thing they're going to be able to get from us is product information side by side by hacking into our system. They don't know who our clients are. They won't know who our clients' clients are. None of that type of stuff.
Okay.
Well, I want to thank you guys for your time. I'm available. You can work through Daniel or Brad, or come directly to myself with any questions or things that you need. If you have other members of your team, compliance officers, supervision people, whoever that needs you want to see this, please let me know. We do have some recorded options here. I actually did record this whole presentation for us today, so I can actually send this exact presentation over to your team as well if need be, if you have others that you feel would be valuable to see it.
Good. Excellent.
Well,
yeah, if you could, you know what, why don't you just go ahead and send it to me? This is Joe Croto.
Okay,
Scott,
I'll do that.
Copy as well?
No, you keep it, Joe. Oh, good. I get it from you.
Okay. All right.
Perfect. I think it takes about 24 hours for the recording to come through on my end, but as soon as I get it, I'll forward it over to you.
Perfect.
Well, that's great, guys.
Right,
I appreciate your time. As you see, this is like a very powerful tool in this type of environment with compliance and what's going on with DOL and FINRA and the SEC. And we feel that even in day-to-day business with the FA able to compare any funds or investment products, not even using it just for the indexed annuities, but we feel we have really a special evaluated tool that we can give to them for doing business on our platform.
Sounds good. I appreciate it.
Yeah. So with that, if there's no more questions, I look forward to our call tomorrow at 10, and I'll stay in touch with Joe as well. If you have any questions, Joe, please feel free to reach out, and we'll stay in touch.
Perfect. Thank you.
Have a great day, everybody.
Thanks, Joe.
All right.
Appreciate it.
Yeah. Hey, Scott.